Thursday, welcome back. Daily Profit Plan. It is 9 o'clock on the 28th. We're wrapping up the month. 2 more days of trading for the month of May. We're up for the month, up for the week. And so far with PCE, nothing has really been derailed. We'll take a look at everything this morning. Let's get the screen share up and running for Zoom. Say good morning to everybody here. All right. What's happening, Donna? Good morning. Hey, Greg. Jeff is here. What's up, Matt? Fabian, Melinda, Larry. Good morning, sir. Sargine, Jez Global. All right, nice to see everybody. Steve, that's the plan. Yes, I posted a pinch point scan. I did a little liquidity scan in the S&P and the Nasdaq. We got some good ones to take a look at, so I'll be looking to price out some pinch points today. We can do that in session, hopefully. We have PCE that came out today. Here is the calendar. Kind of in line with expectations. I mean, yes, it was forecasted to be slightly higher year over year, but it came in line with expectations. So previous 3.2 came in 3.3 with the expected move or the expected forecast. Also, the monthly forecasted 0.3, forecast 0.3 came in 0.2. So the market from the initial price action this morning, this is live SPX 500 pricing. So we have a slight turn. We were down about 0.2% in S&P futures, and now it's back to break even, so flat for the morning. The positive negative gamma is sitting right here around the 75.15 handle. If we zoom out for just a second, I mentioned it several times this week. I mean, the market, I think this is the potential, testing point. If the market's going to head lower as we break 7,500, if we break below 7,500, 74.75 is a gettable target to kind of make this efficiency from Monday, Tuesday. But if we chew into that below 7,500, it's like we just give back, some of the gains we've seen. Doesn't have to be huge. It's just like maybe this starts to roll over a little bit. But look, it's hard. It's hard to see the market going down. The gamma readings that I'm getting right now for live this morning, it seems like this 75.30 to 75.50 zone is it looks like mostly where the heat map is as far as pricing and flows. If we stay above 75.15, okay, above 75.15, that is your positive or negative gamma divider. So for above 75.15, it's positive gamma, which means usually the market is going to be full of selling puts and selling calls and looking for that slow grind to the upside with positive gamma. If we break below 7,500, then it gets into negative gamma where the flows will represent buying puts and selling calls, and there's more volatility with that pressure to the downside. Okay. The plus minus expected move today is very, very small. Very small. 31.68 on Tasty. That's extremely small. Okay. I don't love that. Especially when I'm seeing, okay, so maybe a high around 75.70 and a low around 74.65. And if I use these two levels right now, we're trading live around 75.22. So could the market go up 50 points? Sure. And if it goes up 50 points, that's outside the expected move box, right? If it goes down to, let's say, 74.70, that's 50 points. Again, outside the expected move box. Is it possible we have like a huge thrust to the upside today? I mean, is 7,600 in the cards? It doesn't really seem like it's gettable. I mean, that would be an 80-point move. That's almost 2.5 times the expected move. That seems a little unlikely. But somehow I could see like a 50, 50 to 60 point move today, kind of throwing off the expected move level. Now, does that mean I want to be directional today? Not really. Because if you look at what happened this week, by the way, look at what happened since Tuesday. Tuesday's open. Okay. Tuesday's open. Let me just see if we have any headline news here that's meaningful. Consumer spending looks strong, but higher inflation is a big reason why. Okay, fine. Inflation escalates to 3-year highs. Might be getting worse before it gets better. Snowflake stock went from software loser to AI winner in an instant. Oh, geez. What Snowflake do overnight? Son of a biscuit. I'm guessing it's going to be more than the expected move. This is why I haven't been trading a ton of earnings. Is we're seeing these blowout moves, and I don't like to trade earnings super directional because it's a coin flip, and we have these high IVs, and you're paying a lot for those premiums. Anyway, what I was going to say before we go into some individual stocks here is look at Tuesday open to close, single digits. Okay, look at Wednesday's open to close, single digits. Look at yesterday's open to close, single digits. This market, even though we've had slightly higher highs, this market is barely moving from opening to closing bell. Where was the gain on Tuesday? It was a gap. Where was the gain on Wednesday? It was a gap. Where was the gain on Thursday? It was essentially flat. We actually finished slightly down, like 5 points lower on the day. Okay, but that close was slightly higher than the previous day. So we're just barely eking out these slightly higher highs. Does it mean I want to short the market? No. I think the market has to tell us if we're going to get below 7,500, then there is room to the downside. We can go to 7,400 very quickly, right? Look at the big picture. SPX 500. This is the daily chart. This is my fib. I mean, I can drag it up here. I could drag it here. We had a bit of a pullback right near these tops. So I'd say like that's a pretty good run to hit some overbought conditions. I mean, I think the market right now is just giving us, this is 4 days of indecision so far, and we're still at highs, but all it takes is a little confirmation here, and we probably start a little correction. How big? I don't know. I mean, with the IPOs coming in the next like 30, 60, 90 days, to the tune of hundreds of billions of dollars, I don't see the market giving us this massive correction. Everyone's talking about, the SpaceX, the SpaceX IPO is going to be the top of the market. It's probably 3 to 6 months later before we have something meaningful. I think this market is so primed to keep this thing up, that it still remains the same narrative I've been talking about now for probably 6 months. Upside risk is very real. Meaning everyone wants to short this market. Everyone's talking about the top. Everyone's talking about that it can't be sustainable. We're at these crazy high valuations. Forward looking, yes, valuations at 40 times Cape-Shiller ratios or price to earnings, the S&P at 25, 26 times. It looks terrible for 10 years out. But we could also have a market that goes up 20, 30, 40, 50%, and then it drops 50%. I mean, nobody knows. And you look at a stock like Adele, right? That's just continued to run. It's up 170+% since these February lows. You look at let me see Snowflake, since I saw that with earnings. Snowflake, oh my God, dude. Look at this thing. $175 to $230. It moved 36% overnight. I got to know. Option slam. And I'm sure that this is making traders, the lucky traders that are being directional and overpaying for options, are getting rewarded hand over fist with these crazy, ridiculous moves. Snowflake. What is the expected move? 14%. And it's up 36. Crazy. Right? Like it's 2.5 times the expected move. Not even close. Like the pricing, it's ridiculously poor on individual stocks. Wow. This is why I'm glad I'm not trying to sell premium. It's like, yeah, just buy it. I guess. I mean, it's just, and does it sustain? Probably not. It's probably gonna have a gap fill or at least a pullback. But what a great option trade. You just get in here for a chance to, I paid a couple bucks for a call option. Bam, it's up triple digits easily overnight. So, I mean, the market is picking its winners and losers, and those winners are just being rewarded so well to the upside. It's hard to look at anything and say I want to fade it. I talked about those bonus trades. I'm still planning that little bonus trade for a small risk on Dell. I don't think I'm going to get filled on the trade because I'm asking for like a 1250 credit to risk 250. I mean, heck, I was even looking at this trade last night. I looked at this is an iron condor, but it's an uneven iron condor, and I'm looking at this to kind of give myself a credit of about $400 with a profit trap of about $1,400 around a 20 delta to the end of June. So if you know the distribution curve, a standard deviation in options is around it's 68%, one standard deviation. So that would be roughly the 30 delta. Okay. So if I'm doing a 20 to 25 delta, that should be out here on the distribution curve. That's a little bit further than expected. And I'm talking about, a Dell or I think we looked at Micron yesterday. We looked at Dell. We looked at, what was the other? I think I put them in for bonus trades in Zoom. I guess I should have written them down because it was yesterday in Zoom. I didn't even post it. I guess I know I put them in my accounts, but, or the two trades I posted yesterday. So Dell was one. Was it Dell and Micron? Were those the two? Because both the Ivy ranks were over 100. Micron, yeah. So Micron for $12, and this one was, well, Dell is fine. I'm going to change this one to. I'm not gonna risk that. I'm going to change this one to like replace. Let's make this worth like 750 credit. Let's risk next to nothing on this thing. I'll risk 250 to make 750 plus a profit trap. I'll do something stupid like that. That way, it's like if I'm going to take a trade on Dell and Micron, make it be so small risk wise that I'm getting like a $250 risk that could pay me $2,000 or $3,000 of profit. So that's calling the top, which might be silly, and I'm doing out to the middle of June. So who knows? That might be stupid. But if it gets filled and there's a flinch in these stocks in the middle of the month, maybe we get lucky. I'll take the low risk trade, but I'm not taking a higher risk. True, but I mean that doesn't mean that their stock should be going up. It's like this has nothing to do with giving money to a Trump account. This means that they got a bid for the quantum computing fund that the government put in. They got a direct investment from the government. This is kind of like getting the Intel bump, so to speak. Yeah, it doesn't hurt that Michael Dell donated for the the Fund America accounts for that $1,000 starter for kids, but I don't know. I mean, sure, it's the inner circle type stuff. Who knows? Nevertheless, I did a scan yesterday in Pinch Point. We have opening bell here in about 15 minutes. Let me find my Pinch Point Telegram. By the way, who had a solid winner yesterday in double ups? Double up alerts. We nailed that iron fly. We had a pin price of 752, and at expiration, that max 255 was trading for 251. We were only off by 4 cents yesterday at the pin. That worked out very, very nicely. Looking at Pinch Point, I posted a liquidity scan right here. Microsoft, AVGO, Mondelez, EA. Some of these are looking pretty solid with liquidity, so I'm going to take a look at those. That's 6 in the Nasdaq. I think there were 3 or 4 in the S&P, and we had like 37 in the entire market, over like 9,500 stocks. Okay, very nice, Mark. That's great, man. Okay, so I want to take a look at Microsoft. We do have a decent amount of consolidation. I am curious. So I can trade a couple ways I can do this. I could trade one, Microsoft regaining a little like dominance here in the Mag 7 space, or for some reason it's been like a laggard in the Mag 7. We're well off all-time highs. Do we catch a bid on Microsoft? Apple is at all-time highs. Amazon is just off all-time highs, but still, kind of pushing higher. Broadcom at all-time highs. Google at all-time highs. Meta, same thing with Microsoft, down, but it seems like this low could be pretty safe to play. So when I'm looking at Microsoft for pinch point, I mean, I'd like to think I just get long here and have it go higher. If I want to look at something like a broken wing butterfly or some type of like uneven trade that gives me a little bit of a defined risk trade with no upside risk, like if it goes up or sideways or down, I can still make money. I'd like to build out a trade like that. It just depends on what the timeline looks like. So I might get a little bit more creative on Microsoft for us, but I'll put that one down to maybe build out a trade. Okay, let's take a look at WBD. This one, I'm not going to trade that. We've spent now 4 months going absolutely nowhere. That one looks like it's pinched obviously, but there's little to no price action. I'm going to stay out of that one. AVGO. Okay, same thing here. Nice and pinched. Um, Part of me, I mean, I think we have a trade like this coming. It's like if we just have this huge run, I mean, this could continue to gain to the upside after this kind of burns off some of the overbought conditions and some of the big, the velocity that we saw to the upside. Either this consolidates longer to then go higher, or we have a pullback and the dip is somewhere in here to buy it and retest the highs. So what I'm thinking on AVGO is some type of maybe similar structure is, maybe building out one of these type of trades. Like it's an iron condor type strategy that gives me, some credit on the there's no risk if price goes sideways or up. There's no risk. Try to pull in something like that. Um, I don't know if I can do that trade. I'd love to do that trade. There's probably more of a project options edge trade. But let's see if we can build something in this space here. Maybe give ourselves a little bit of wiggle room, maybe a profit trap in here and define risk. So that way, if price comes back to maybe the 50 or 60%, we can still get paid. And then if price goes higher, then we just keep the tail credit. Okay, so that one's not bad. So Microsoft, AVGO, not bad plays there. Also a top 10 stock. I mean, AVGO is a $2 trillion company. Another one, MDN, it's Mondelez MNDZ. Is that right? No. MDLZ. I think that's what it was. MDLZ. Yep. So this is a big food company. Super, super consolidated. Let's check this one from the fundamental side. Make sure there's upside. Should be a pretty good snowflake analysis. MDLZ. That's actually worse than I thought. Dividend not well covered, debt not well covered, profit margins lower than last year. Earnings forecast to grow. Trading below estimated value, 30 times earnings for a food company. Premiums are probably not going to be awesome. I mean, honestly, I might build out all these like very similarly. MDLZ, where I would have like no sideways risk, no upside risk, and then try to build out a profit trap with any type of dip and pullback. CRPD, Skybridge Crypto and Digital. No, thank you. That's low price. I'm not flirting with that. We're a $14 stock. EA, is that EA Sports? No. It must be this one. I think it's EA Sports. Let me check in the. Okay, let me log into One Click Trading and confirm that it's EA Sports. Is my camera on? Yeah, it's in. I'm live on Restream, so I have YouTube channel running and Twitter running, so I'm live with that. That's the camera. The camera's not on Zoom because I can't do camera on Zoom and camera on YouTube. So it is broadcasting on Zoom, or just the screen share on Zoom. But if you want to see my face, it's going to be on YouTube. Let's go to. All right, let's go to the scanner. So we're down to 26. I'm going to do the Nasdaq scan. Now we have MDLZ, WBD. The CRPT one is no longer in there. EA Sports is no longer in there. Did it start to move already? Let me see if it's. Let me go all stocks, scan EA. So this is a $200 stock. Well, that's not EA Sports, I don't think. I guess it is. Again, look at this. Somehow there was a huge gap from September last year. This is a no trade. Like, yes, it's pinched, but that's not what I trade. We're having 6 months of consolidation. I'm not going to play this game. Something happened on this, reading where it's way up here. Um, I don't know. That's just a we haven't gone anywhere from September 2025 to now. Hmm. Let's check on this. $56 times earnings. I don't know how they're doing this well. Actually, it's like they're carried by essentially the Madden franchise. I know they make other games as well, but I mean the big. I think Take Two. If this is publicly traded, Take Two Interactive. This is going to be Grand Theft Auto coming later this year if they finally release it. So this could be getting a bit of a bid. So there's been some hype around Grand Theft Auto 6 coming out in November. It's only been, I don't know, 2-3 years delayed. So could be interesting move there to benefit from it. I'm actually curious if I can take this trade TTWO, looking at like the 190 area. Maybe that's a good candidate for Project Options Edge. Yeah. So we'll see. But I think if I was able to keep support above 190, and then they actually, I mean, I'm hoping they actually deliver. So my goal is, let's see what expirations look like prior to November, because if they don't deliver Grand Theft Auto and this stock takes a huge nosedive because of that lack of delivery, or if that breaking news that it's going to be delayed again, there's clearly risk in this trade. Let's take a look at the fundamentals. So TTWO. So seems to be pretty fairly priced. Insider selling, I don't love. 6 times sales, fair pricing. Okay. So, I mean, 190 seems like strong enough as far as bullish posture. Um, that's a maybe. All right. Let's go back to a little daily profit play prep. Looking for, highs and lows on the day. 75.70. Oops, let me change the color here. 75.70 and around 74.65. Okay, market's trading around 75.21. We are still just a tiny bit above in that positive gamma environment. Is it going to use, PCE as a catalyst today to drive prices one way or the other? Should we consider maybe a reverse iron condor if we have price go directional today? I mean, the dead zone would be relatively cheap. We could probably go like 20, 25 wide dead zone. The only issue is we have a plus minus 31 on the day. And the last 3 days in a row, the market's been within about 5 points from open to close. So the fear for me is this trade doesn't have any direction. And if it starts to have no direction by 1 in the afternoon, 2 in the afternoon, all of a sudden you start to sag into that dead zone, and that's where the risk is. So if the market is like, yep, we're pricing out 32 points today, and it's going to stay just completely sideways, so be it. You know, um, I think we're vulnerable below 7,500. I mean, my gamma profile today, it's like 75.30 was hit yesterday. The intra-week high is around 75.54. So, I mean, like I said, I'd like to think that we're not going to go to like a 70, 75, 80 today, but we certainly could. So I just need to be mindful of that. If we go into negative gamma, so if we slip below 75.15, hit 7,500, if we slip below 7,500, I mean, I do think the market could give back 74, 75 or lower. So I may not be looking to add a bunch of puts today. I might just look to like stack up some calls with some protection and see if the premium is decent. Problem is I might be 50, 60 points out of the money and, hoping for the best. I might have to let price come to me. So if price goes up for the morning, I might have to let price come to me and not to take the initial trade, is just rather setting a pending order for daily profit play. we have a couple of candidates here as far as, butterflies, 7530, 7500. We've really seen those levels all week long because that's where the market's been stuck. It's been holding 7500 lows, it's been holding 7530 highs, and intraday or intra-week highs were at 7550. So this has been the range the entire week. Question is now, are we going to break it? Are we going to break it? We're going to stay inside of it. We're at like 4 days of indecision. You take a look at SPX. Look at our price action here. So 1, 2, 3, 4 days of indecision. Can we finally have a move to the upside? Sure. We have a gap fill. That gap fills around 7,466. So if we fall, I mean, like I said, we crack below 7,500, we can drop to 75 or 60 pretty easily. And the week would still be held up as long as we stay above 7,473. The week is still considered a positive gain for the week. So we could technically have, a bit of a red price action candle, but still have a positive gain for the week, which is why I wasn't chasing things this week on engineered options. So we will see. But I don't see a lot as we're coming to opening belts. Like, I don't see a lot towards the 75, 80 area without going way higher than the expected move, which obviously that can happen. But let's see what this looks like for some price action today. All right. I'm going to take a look at. So I built out this. I'll try to close this thing down for a small winner. I pulled in 310. Give me 310. I put in this trade incorrectly yesterday. I'm going to try to close it out without. All right, so I'm just taking a $15 loss there. I'll build that trade out again. Let's take a look at today's SPX. We'll also have another flashpoint trade pending in the next 9 minutes or so, 10 minutes or so. Let's go into today. Take a look at my expected move area. Delta-wise on the calls, I had a feeling I'd be trading very low deltas, and I am. Like, these are, 10 delta, 75, 60. We're at 17, like right around, we're just right around that HVL or the, positive negative gamma pivot point. 75, 30, 75, 50. Here's what I'm thinking. If I went like 75 or 80, I mean, we're talking very, very low deltas here. But I'm going to go, gosh, this delta is so low. 20 wide. It's a 4 delta. I'll go 20 wide here at 74. Can this give me a $2 fill? If I'm willing to go 75, 80, 20 wide, play some defense as well, but I need to get filled at $20 or $2 before I do this trade. So that means I'm going to have to look for some type of direction one way or the other. If we break 75, we could fall to 74, 75. It's pretty vulnerable. I just think with an expected move, what's 74.20 percentage-wise today? If we fall to 74.20, there's my expected move box, by the way. So 74.20, that's a 1.3% drop on the day. I mean, it should be safe. Nothing's guaranteed, but should be safe. If prices at least give me $2, I can, maybe play around with some butterfly spreads or something cheap. So let's see if this will fill. This is a pending order for daily profit play. Not filled yet. If you want to go a little bit tighter, I mean, mechanically the 10 delta is around the 75.60 handle. That'd be 65 by 75, 10 wide. That's a 7 delta. Let me match that, see if this actually works. That's a 50, 40. I I mean, if so, I wouldn't mind this trade either. These are low deltas, 7 delta, 10 wide, trading for 80 cents. If it fills for $1 or $1.05, that's not a terrible trade. So if the market just kind of chops around, stays between 7,500, 7,530, I mean, it's rangeable, right? It's just a range trade. But that's a 7 delta setup. That's not too bad to be delta neutral. But I'm going to take this pending order. So pending order SPX. Today's the 28th. 7580. 760. Okay, pending order. Let me see. If I do I mean, we just been bouncing off of 7,500 all week. So if we get a breakout today, like this is not a bad trade. This is pretty low risk. If we break below 75 and stay there, or break above 75.30 and stay there, this isn't a terrible trade for the inverse iron condor. Like again, I don't know what the fill is going to be, but if I did like 640, 650, I'd be risking 350 to make 150. That's not terrible. We just need to see if price will break out of that 31 point range. It's Thursday. I feel like it'd be nice to see that happen. My dead zone is about 30 points here. And that's why I'm getting rewarded, because the plus minus is 25. So if the market stays within this level, this isn't awful. So just trying to think here. These are always like really tough trades, because I have to make a decision in this one. You don't get paid right away when you take this trade. You get paid like later in the day, or if price is, breaking below 7,500 and it's noon, then you can take some profit. I just don't want to see price come back into the dead zone, late in the afternoon, because that's where it starts to sag and give you risk. So it doesn't seem like a terrible trade to be, 675. Risking 325 to make 175. All we need price to do is get directional today. Let me take a look at this for tomorrow. Just in case I'm like, well, I don't know what today's going to be. Markets are, not really loving this PCE news, or it's maybe a lackluster catalyst. So let's look at tomorrow and see if it's something similar. So tomorrow we have a plus minus 46 current environment. If we're below 75 or we're above 30, now the broker says you can have 575. Now I'd like $6+ for this trade. I just don't know if I'm going to get it. How much does it cost me if I do it for Monday or Tuesday of next week? It's probably going to be less and less premium. So if I go 10 wide there, 30 by 20. Yeah, no thanks. I can make $85 to risk 915. No, thank you. I can risk 440 to make 50, $60. No, thank you. All right, never mind. So I'm not going to do the directional play. I'm just going to let my 20 wide sit and penned right now. Structures in here, 7,500. Let's put a chart alarm there. That's a key spot. If we break below 75, I think we have some vulnerability to the downside. 30, 40, 50, that's kind of our weekly high. Let's see if we get some sense of direction today. If we do break 75 and start to push lower from 7,500 to 74.75, that could be activating a flashpoint trade as well, which is not bad. By the way, I posted that if you saw that alert for Telegram yesterday, I think I posted that in One Click Trading as well. But I did some numbers. Thought this is an interesting summary. Historical flashpoint performance and summary. So alerts fill about 20% of our trading days. So basically every 5 days we're getting one trade, and that's a flashpoint alert. Win streaks were very, very common. We had a lot of winning streaks of 6, 7, 8 trades in a row. We had multiple like 8 trade winning streaks in a row. A lot of them were like 5 in a row, 6 in a row, 7 in a row. So lots and lots of win streaks, which was nice. But there were losses sprinkled in. Like, you'd have a winner of 2-3 trades, loss, a couple losses in a row, 2, 3, 4 in a row. So anyway, net result over 4 years. So 2022, 3, 4, 5, and 6. So I guess that's 22, 3, 4, 5, and now current trading. So 4+ years of trading this. The best win streak was 8. The worst loss streak was 5. I talked about in the masterclass this week whether you want to use just the same contract size every single trade, which is fine, or the increase the step, which is if I take a loss on one contract, then I go to 2 contracts. Take a loss on 2 contracts, go to 3 contracts. When you take a losing streak of 5, question is, are you comfortable going take a trade for 1 contract, lose, then go 2, then go 3, then go 4, then go 5? If you did that, we actually made a decent amount of premium higher. So if you're trading SPX, you're up about $28,000 with this strategy using the step method. If you go martingale, and I want to explain, like it looks great. Hey, I'm up $32,000 or $38,000 on martingale. But if you have 5 losers in a row with a martingale strategy, that would be 1 to 2 to 4 to 8 to 16. And I take a loser, 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 loser. I'd have to go to 32 contracts to get my winner in order to add to that. That's why I say I don't want to trade martingale. That's way too many contracts. Yes, you squeeze out an extra $10,000 in profit, but if this was a loss, that hole just gets that much deeper, and then you got to go 64 to buy your way out of that. Many traders are not going 64 contracts. Okay, so if I went 1, 2, 3, 4, 5, and our average loss is around 30 to 33%, I can stomach that sizing for my step method that we talked about in the masterclass last week. Okay, speaking of, there's your alert for Flashpoint today. So let's get that posted. All right. So anyway, I had some fun with that this week. Let's get a little Flashpoint level in. All right, we're going expiration 6/1, which should be a 2 trading days. So today is Thursday, so we're going to go Friday and Monday, which puts us out to June 1st for today's trades. These are going to be pending orders, good till canceled. My pain point is 7445. I'm doing the 70 by 75. We've seen those levels almost all week because price has been very quiet this week. So 74 by 75 for a 260 debit. So we'll go here. 260 debit, good for the day. And that take profit is 325. I'm going to bump this up a tiny bit, good till canceled. I'll go after that little 40% winner if I can get it. And then the stop loss, I'll go $5.05 to basically take on the full risk, which should not activate. But there's my full risk. So my pending order for the Flashpoint level is good for the day. That way, if it doesn't activate, there's no trade. It just removes itself end of the day. But if it's activated, I automatically have my take profit in, and I have my stop loss in, which, again, stop loss will be managed most likely by end of day tomorrow, or we will hit our take profit. Okay, so that's going to be my Flashpoint alert. That is pending. And I'll also do my tsunami alert, which is a little bit deeper. That's the 20 by 25. Advanced. That debit is a 280. Good for the day. If that is activated, get me out at 325. I'm going to bump that up a little bit higher. I'm going to go after 30%. So we'll go after 365. And I can always double check this and manage it. If I want to take the 20% winner, 25% winner, that's fine. But I'm going to try to give myself 40 and 30% winners respectively. I think that just that way, if we get the reflexive rally, we enjoy the slightly higher return on risk. All right, so that will be good for the day. And then if it gets activated, I have these GTC trades to close out for profit. Send. All right, so Flashpoint level is pending. Tsunami level is pending. My work is done for the day on Flashpoint. Hooray. Okay, Max, you asking about Flashpoint? So I take the trade for a debit. And if that trade gets filled for a debit, I'm looking for a credit to close. All right. What are we doing for price action right now? 75.10. We're in this like tiny little negative gamma right now. 75.10 right below the 75.15. 7,500 could still offer a bounce again. We might just be stuck within this area. If we break below 7,500, this is where I've been talking about this market, gives some of that back. Let me see if I can build something out around like 75.50. I mean, we'd have to rally like pretty hard to get up there, but let me see if I can build out like that little broken condor trade today. Let's go to today. I don't think the premium is going to be great on this, but let me see if I can build out this like uneven put condor. So if I went 50, let's go 55 by 60, and then maybe 70 by 90. So that's 20 wide with a $5. I think that's going to be a small debit. 15 wide. So that's 5 and 15. I don't think there's going to be any profit on this trade if I build this out. I will see if I can model this thing really quickly. These trades are tough in a 0 day. Let's see. I might build it out for tomorrow and see if I can get any sliver of credit. Let me go SPX. So I'll go out to today. Again, for a low, expect to move 55 by 60. So 55 by 60 and 70 by 85. No, you don't want to do it? Okay. 55, 60. 55, 60, 70, 85. Show me the chart. All right. So this is what I want to see. But see right here how there's no tail credit? I want to get paid. I want a profit trap up here, which would be great, but it's like I need to pull in some type of tail credit here for maybe $50 to $100. I might have to make this a slightly higher risk, which if I go one strike higher, okay, now I am 20 wide. Even that's not really going to offer. I mean, maybe $15. Gosh, this freaking sucks, man. So if I take this up to 75.90, that might give me a tiny, tiny tail credit. Nope. So if it's below $15 debit, if I get into the trade for less than, so like if I get into the trade for $14.80, okay, so what I'd be making here is $20 as long as price just stays, below 75.55, I make $20. Not excited. I'm not excited about that. My profit trap is from 75.55 to 75.70, actually up to 75.75. I'd have about a 20-point trap where I could make up to $500. Okay, and then it starts to ramp off by about 75.75. We get back to break even. So that little tail credit of like $20. I mean, again, if I want to go slightly higher here, take this up to 7,600. This one might actually offer a bit of credit, but there's going to be some risk. Let's see what this tail credit offers now. This has to be offering some type of tail credit. So that is 5 wide and 30 wide. And now I can get into the trade for, if I'm 30 wide, it's still the same freaking trade. Son of a biscuit, man. That's bogus. Yeah, it's just tough to get that trade in a 0 DT. Let me try something similar for Friday, I guess. Give us a little bit of time, or maybe even Monday, Tuesday. Let's see. Expect to move around 75.85. I'll build this thing out. Let's go 76. Build out $1,000 profit trap. 15. So that's 10 wide. and I'll go 30 wide here. So this one's not awful. Let's see what this one looks like. So I go 10 wide profit trap, 30 wide risk. I'll do the math here. So 10 wide profit trap, 30 wide here. And that should get me about $1.25 a profit on the tail. So it'd be $1.25 profit trap and then risk. Still define risk, but that gives me about 125 bucks. And I also can bank in a $1,000 profit trap. If we're up to about 7,600 to 7,610, my break even price in this is going to be 7,625. And this is going out to Tuesday the 2nd. I mean, is this a smart trade to risk that much money? I mean, probably the profit's pretty high. Does the market pump into the first part of June, or is it going to be like a nothing? I don't know. Let me build it out. So this should be worth maybe, that's 30, 20. Yeah, I mean, I get like $200 of profit here. That's not terrible. It's not terrible. But I would possibly want to play some defense on this. If I get $2 of credit and I want to play a butterfly spread, I might put a butterfly spread in there to mitigate that risk. Let's play around with it. Let's play around with it. So this is out to June 2nd. Let's build out another trade here. Let's go option chain. Delete these. Let's go to June 2nd, see what this looks like. June 2nd. Okay, so I'd be going up to build out around 7,600, 76 by 7610, 7,600, 7610, 15 by 45. Is that what I said? Yes. So 7,600, 7,610, and then 15 by 45. This tail credit, there's the like $200 I was talking about. So if I can get into this thing for under $18, as long as the debit's like 18 bucks or lower, this is showing like, oh, fudge. See how this is trading mid at like 1940, 1910? I would not take this trade for less than, if I put like a 1750 debit here. So if I put in a 1750 debit, that gives me 250 bucks. I still have a $1,000 profit trap. My break even price would be around 76.25 plus my credit, I guess. So I get a little bit more of a buffer there. I just don't know if this is going to fill. Let's see. That's a lot of risk. That's a lot of risk. Let me see what a butterfly spread. I'll probably do this. If I can get this thing filled, then I may look at a butterfly spread as defense, because I'm going to try to defend that 1750 and not take a loss there. But I don't think this trade is going to fill. It's not filling today. Like this is showing like 1930 debit. I want this thing to be trading under like 18 bucks. I will give it a whirl. 1750 debit. I'm going in. So if it fills for 1750, then that brings this tail credit up a little bit. Brings it up there to up about $2.50. So that way, if I am right and price goes up a little bit, I get filled at 250, but price does not breach 7,600, then I get paid 250 bucks. And that's to Tuesday. I also have a profit trap up here that ramps up to $1,000 on top of my 250, and my break-even price would be 7,627.50. That's my break-even. Now, the reason I want to know that price is because on my deltas right now, 7,627 is around a 12 delta. It can be reached. I get it. Like price can find it. But if it doesn't find it, and that would give me about an 88% chance of profit on that trade, that seems pretty safe that I'm not really taking on a lot of risk. I have about an 88% chance of profit on this trade. Question is will I get filled at the price that I want? Okay. So I'll put the order in. And if it gets filled, if this trade gets filled for 1750, I will then go into a defense trade. This is a trade out for Tuesday. Okay. Does anybody want this trade? Know the risk. I mean, if I'm wrong on this trade, I'm risking 1750. So 250 is what I'm asking for upfront credit. 1750 is my max risk. I will play defense on this trade if I'm filled because I don't really want to risk 1750 on the trade to be blown out to the upside. Okay, so if this is filled, I will then take a defense trade. And that might be a broken wing, that might be a butterfly spread, might be something 10, 15 wide to offset some of that risk. Okay. And of $2.50, I'm willing to probably spend up to 50 cents or $1 on defense and still work my way through the trade. It's not a program. This is just me talking shop. This is just a bonus trade I'm throwing out there. If anybody wants it, I'll type it in. I'll be curious to see if this gets filled. Okay. So live price is still 75.15. I'll post the trade here and I'll make a screenshot of if you want it. So this will be bonus trade. Bonus trade. Pending order. SPX June 2nd expiration. Buying the 7600 put. Selling the 7610 put. That gives me the 10 wide profit trap. Then selling the 7615 and the 7645, which is what allows me to kind of finance that trade for the left tail credit. I'm asking for a 1750 debit, which would be my max risk. 250 tail credit and a $10 profit trap. Break-even price would be 7627.50. So if price stays below 7627.50, there's no risk. If we stay at 7625, there's bonus profit. We stay at 7620, there's bonus profit. And I mean, if we just stay below 7600, we're going to make money. But I want to see if this gets filled. So pending, not pending. Who wants a pending order? All right. So I'll take a screenshot of this. I'll share this in the, I'll just put this in my public Telegram. If anybody wants the trade, here's what I'm doing. And again, totally optional. If you don't want the risk or don't take it. Don't take it. So bonus trade. Flashpoint, I already put both my orders in, so those can just sit. Pending order. Let's go public Telegram here. This is a bonus trade. Bonus trade. Looking for 250 tail credit, 1750 max risk with a $10 profit trap. Break-even price is 7627.50 and profits lower. So there's no risk below 7627.50. So SPX 6/2 expiration, 7600 put, 7610 put, 7615 put, and 7645 put for 1750 debit. Okay. Bonus trade. All right. Optional. Where are we at right now? Still freaking sideways. I mean, is it possible today's going to be just another big nothing burger day? It is very possible. Okay. I am going to let price come to me. I'm not going to force a trade today. If I think that price is going to be sideways for the entire day, somewhere between 7,500, 7,530, I mean, that would be Tuesday, Wednesday, Thursday, even last week on Friday. This would be Friday, Tuesday, Wednesday, Thursday. That's 4 days in a row of little to no price action. It's going to break at some point. I mean, we're not going to stay between 7,530 and 7,500 forever, obviously. So the question is today the day that we break? I don't know. So I don't see a lot of attractiveness up towards these highs. I mean, I'm trying to sell my premium. I'm doing the 7580, right? 7580 by 7600. I'm going pretty high up 20 wide, but I'm also going way down here 20 wide. So I mean, I'm giving myself a wide range for price to give us some type of direction and still be safe within my daily profit play. So I'm going to let price come to me for the day. If I wanted to kind of double up yesterday like we did, if it's going to be stuck inside the range, a 751, if we stay stuck here, a 751 could be a good iron fly in XSP if you want like a low risk iron fly. The only question is if price breaks above 7530 or breaks below 7500, that trade's going to be trash. But I'll look at it. So if I think it's going to be a big nothing burger day, and you can also do this in SPX, an iron butterfly, and it sits sideways chop for 2 hours, it'll probably pay a couple of bucks. XSP is more like I'm going to sit on this thing for the day. So if I did a 751, I mean, even a naked XSP is only going to be getting 260. Like, that's terrible premium. So if I went 5 wide and 5 wide here, I get 235 to risk. It's like I'm taking slightly more risk than I want, which I don't love. I can obviously tighten it up and take on a little bit less. Now I'm risking 180 to make 220, but I need price to basically stay between 750 and 752 today. If it does that, we're in good shape. I don't think I'm getting a lot of premium for even an iron fly. I don't love it. So I'm going to pass on that for right now. We can go to pinch point. We can price out some more trades. I'd like to look at Microsoft and AVGO and MDLZ and Take Two Interactive. I'd like to look at some of those for pinch point or whatever trade I can find. And we'll just see if price comes to us today. Yeah, Steve, I don't have a double ups trade right now. I think XSP looked good yesterday. It was almost perfect yesterday. I mean, we were only off by 4 cents at the close, so that was pretty much a perfect double up yesterday. I mean, again, I'm seeing very similar profile where 7,500 to 7,530. I'm just kind of questioning at 4 days in a row of nothing. It's like, is today a Thursday? PCE. It's like the market's not going to go anywhere again. It's possible. It is possible, but I don't know. I think what really turned me off this morning was the plus or minus 31.68 on Tasty Trade. It's like that is such a low expected move. So I don't know. I'm just going to hang out. If price doesn't go anywhere today, then yeah, joke's on me. I didn't get a trade and I didn't get super aggressive on a tiny little expected move. Okay. So let me go elsewhere. Let me go to Microsoft. Well, there's Microsoft. Let me see. I'm going to try Microsoft for a little. Let me see what I can build out for Microsoft around the 400 handle. We already had earnings. If the market has a bit of a hiccup, does Microsoft pull back with it? I still think there's a bid there. Let me see what this looks like for defined risk. Let's look at like the 400 zone. Yeah, let me look at the 400 zone on Microsoft. So MSFT, maybe looking out. I might go out to the 43 to 50 day zone. I'm going to go July 17th. Give myself some time in this trade. This one might actually be pretty good. So if I go to the, let's buy the 405. Let's try something like this. So that's a $500 profit trap. Maybe go 15 wide here. So this one I can get some credit. So if I buy, sell, buy, I actually get credit up front and I have the profit trap. Let me see. There's no upside risk on this trade. There's no sideways risk. There's no sideways risk, no upside risk. You can have price drop, up to $35 before you take on really any heat here. Let me build this one out. Move this up. This might be a pretty good trade for defined risk. Can I tighten this up a little bit? Maybe. That is 10 and 15. This one might not be too bad. Let me build this one out. So where'd my option omega go? Here it is. All right. So I'm going to save this one. This is a June 2nd SPX. Okay. Let's go to Microsoft now. So this one going out to July 17th. 410. So if I go buy the 410, sell the 400, sell the 390, buy the 375. This one should have a tail credit. Guess we'll do it again. Buy the 410, sell the 400, sell the 390, buy the 375. All right. So I have a 15 wide, 10 wide, 90-cent debit. This should be like a $400 trade. It's not what I wanted. I did it on the put side. Actually, no, fudge. I switched that around. Sorry. I did do calls. My bad. These are calls. So it's on call sides. Yeah, not put sides. Because I'm actually looking for no upside risk. The opposite of what I just did on SPX. All right. If I go 405, maybe this will give me a tail credit. 405. Ah, there we go. So I can go 15 wide. Gosh darn it. Let's try the 395. That one's okay. That one's okay. It's a little bit more risk than I want, but I'm giving myself, let me check this one out. So if I went 405 by 400, 395, 375. So we get about $1.80 credit. My break-even price would be 390. I guess 388. Let me see what 388 is on the chart. 388. So we have this little tiny fib here. If we hit the 618, that's 385. I don't know. That's a little bit more risk than I want. The reason I'm looking at this one is because it popped up on my pinch point scanner. I mean, the cheap trade would be possibly just, we break to the upside, easy peasy, right? If all of a sudden it's like, if we're going to get a move into summer that's promising, I don't know if Mag 7 needs to take a hit to bring the markets down, or if we're just going to keep pumping and Mag 7 has another catch up trade. The broad market, and I'll come back to Microsoft in a second. The broader market is, I'm not saying this is improving a ton, but it's certainly better than what it was when we had that dispersion trade through March. So this was the dispersion trade where the markets were down. We had that, low point where I was really tempted to kind of buy this thing around like the 15 handle. It just didn't get there. It was 17. We're 55% of S&P stocks above the 50-day moving average. We have almost 58% of stocks above the 200-day moving average. Nasdaq is almost better market breadth, but you can see it's starting to deteriorate a little bit. But we still have over 61% of Nasdaq stocks above a 200-day. So Nasdaq's been just crushing it these last like 30 to 45 days. I don't mind me some Microsoft. Question is, I can probably sell more premium and get a better trade going down to like the 370, 60 zone. Let me see what this looks like on a ratio spread. This may not qualify for pinch point trade unless I want to do something very cost effective, which is if price pulls back Let's say price pulls back here to like 400 bucks. Okay, let's say price pulls back down here to like 400 bucks. If I did like a 400 by 405 and I get a debit spread, define risk and try to get this where, I pay $2.40 to make $5. So my net would be 260. That gives me a greater than 100% gain, but let price come to me. The issue is if I get that trade pending and price just goes higher, I'm not going to get the trade at all. I just have a hard time looking at this and saying that's where I want to buy Microsoft. I want to build something out where it's like, is there a broken wing butterfly in here? Is there a ratio spread in here? Something that just gives me a slightly more forgiveness where the markets can fluctuate a little bit. A broken wing around this like 400 handle might not be terrible. Let me check this one out too. Let me try a broken wing. This would be a put fly. Let's look at this one. So this is out 50 days. Put fly, maybe build out like the 390, 380, 365. This is my concern was that it'd be like 0 to no credit. That one's okay. But let's try this. Let's try like a 400. Let's try this trade here. So 400 by 395 by 385, but I want more credit, right? So I'd be risking if I put this in for $1, or better yet, let's go this. Let's do this. If we're going to risk 5, let's go 250 credit. I'm risking 250 to make 250, and I also have a bonus profit trap at the 395 pin. So if I'm wrong here, price would have to stay below $400 for me to be wrong. The 618 pullback is around 385. My break-even price on this trade is 387.50. So if we bounce off of 385, this trade should actually be pretty decent. So I'm going to put this trade in for this. This actually would be a pinch point trade if you want to take it with me. It's pending. It's not going to be filled, but this way I can kind of build out the area that I want. So I'll do this out for 50 days, pending order 250 on Microsoft. Let's have a look at it. So I'm risking 250 to make 250, but I also have a bonus trap to offer me up to $500 extra, so I can make up to 750 if we hang out around 400 bucks. All right, pinch point, you're going to get this trade. So let me throw that in Telegram for you. Okay, pinch point, new trade, Microsoft. Let me find the number here. It's going to be trade number 139. Uh, 7/17 expiration. Okay, pending order. That is a 7/17 expiration. 400, 395, 385. Okay, pending order there. Fabian question. Yeah. What's the question? What does the price have to do? I mean, price has to move. I mean, is price moving today? Kind of. It's starting to move, which is good. If we get a little bit of a thrust one way, there we go. There's a freaking move. SPX just got filled. What the F, dude? Look at that thing. I just got filled on that bonus trade, by the way. Is this a Trump tweet? This is some bullshit if it is. I mean, again, this is an inefficient move. That type of movement directionally today, that's got to be closed on daily profit, by the way, as we're staring at this freaking gargantuan move right now. So I just said SPX fill. So that 250 tail credit for June 2nd did fill. My daily profit play for today pending is trading for it got up to about $1. All right, we're still moving. Now we're over $1. If I get filled in this trade, I'm playing some defense. Let's see if the gamma. Look at this. There we go. I just got filled on daily profit play for $2. Like, this is the shit that I'm talking about. What is this move? What is this? Plus minus 31 in the day. It's like, oh, we can't control anything. It's up 31 points. Now, the good thing is we just got filled for $2. Now I can start playing some defense. I got some extra credit. We're at, 80 by 7,600. So I'm not really at risk unless price continues to be stupid today. But this is an inefficient move, to say the least. So my 50 or 75.80 to 7,600, that's my call side. Let's see if this thing actually rejects off the day. Inflation 3-year high. Yeah. Silly candle, right? Look, I wouldn't be surprised by the end of the day if price comes back to retest 75.25. Like, you don't see this happen very often in an index without some type of, like, one day catalyst. It's like the market's going to move up today and then it's going to fade it tomorrow or later. So let's see if there's any breaking news. Like, something clearly has happened. That's not normal price action. Stupid market watch says stocks tumble. Exactly. Bob says, I'm a lifetime all access diamond member. Should I get all Lance's stuff? Are you a diamond member of Lance or a diamond member of me? I mean, if you're a diamond member, it's like, of what franchise? Is it Lance? Is it me? Like, I mean, you're getting who you pay for. Yeah. So if you're in Lance's stuff, then you should get Lance's stuff. So what course are you asking about? I mean, Lance has Kira. He has his news flow scanner. He's got his 4 p.m. payouts. I mean, there's a variety of stuff. Flashpoint's mine. Flashpoint's mine. So Lance just basically endorsed it with me. I showed him the data. He came out to do the launch with me, but it's not his product. It's my product. Okay. Let's see what that daily profit play is. We just got filled on it, so that's actually kind of good. Let's check it out. So for the June 2nd, so this is an in the money put Condor. That's already up 50. Well, was. I'll keep an eye on that one. And this is my daily profit play today. All right. So the put Condor goes out to Tuesday. Today and tomorrow, we're obviously, it's price. I'm looking at maybe having that 10 wide profit trap. Let's see what happens. Should I play defense there? I don't know. It's manageable risk. I'm down $50. I'll let this one marinate for the day. For daily profit play, I mean, if we have a quick like $100 on the morning, I might just take it. Get filled for $2. There's going to be a little bit of volatility. Let's take a look at the expected move now. Now the price is moving and shaking. It came out of its shell. Now we're seeing the upside around the 65 to 70 handle. When I looked at it this morning from the static gamma profile, I looked at the 75-70 high. So I'm hoping that our high is pretty darn safe. I may also play some defense here towards these highs. Now that I have $2 of credit, I'll play some defense up here to make sure I'm not getting burned in the upside. So, $2 would be great for the day. But, I mean, look at our puts. Puts are way down here. Puts are most likely going to be very safe for the day. Now I need to make sure that I'm managing some call side risk. So let's go, 80 to 95. Maybe take something like this. 5 or 10 cents credit, give myself $1,000 wide profit trap. That's not too bad. That put my break even at 76.05. I'm going to take this trade. I'm going to go 2 contracts here and give me like a $2,000 profit trap. Let's see if we can get in this thing for like 10 cents debit. 5 cents debit would be even better, but I'll throw $20 at it. All right. Should I go a little bit more premium? So 85 to 95 puts me at 10 wide. Actually, I'll do this. I'm going to go 85, 95, 15 for hopefully no more than 10 or 15 cents. And I'll throw another one in 90. Ah, damn it. That's going to be, I guess I can overlap. I go 90 to 7,600. And that gives me a break even around 7,610. Number one, what the hell is happening? Like, what is this? What is the reason? Not FinViz. Let me go to financial juice. Any breaking news right now? I'm just curious, like, is this Middle East related? News feed shows what? US Iran reach a deal, but need Trump's final approval. There you go. There's your dumbass price action for the day. All right. I mean, I feel like I need to play defense. I mean, it's like if we get blown to the upside and this is an inefficient move, it's like I need to play defense. Or I'm going to be furious if I get blown out to the upside on a 20 wide. It should not, like, again, based on the expected move of 75.52, even gap adjusted, even the expected move calculation here for the day, we really shouldn't see in a normal environment, we shouldn't see prices going up above 75.70 today. I still need to feel, I feel like I need to play defense though. So there is a 10 wide profit trap. Let me see if I can get in this for maybe a 5 or 10 cent debit. 5 cents not filling. 10 cents not filling. You dirty dog. Let's go 85 to 76. I'm going to overlap the strikes. I don't love doing this, but if I overlap the strikes here, let's kick it in. So that's a sell. I can't overlap the strikes because I want to sell that butterfly. 75 by 90 puts my break even at 76.05. Let's try this one. My concern is the debit's way too expensive. 60-day to extend truce. Is this a deal with the Invisible Man? All right, this one's not bad. I mean, that's low risk. I could also sprinkle in. I mean, the good thing is I have $2 to work with. Are we up to fresh highs? We're fading a little bit. This is good. Like, I want to see price just contain itself. Selling some premium up here. Our puts are way, way, way down here. Where'd my puts go? 74.20. I'd love to see the markets just do the exact opposite of like, we struck a deal. And it's like, yeah, it doesn't matter. You know, all the deals been priced in. Now it's time to fade the news. Day's not done, obviously, but I again, I'm going to play some defense to the upside just to be safe. We're well above the expected move. Hopefully, we're going to be safe. We'll find out. But that's why we trade. There's always risk. Nothing's perfect. This is a 10 wide for a 5 or 10 cent debit. See if I can get in on this one. Looks like 10 to 15 cents is going to be the fill. All right, got filled for 10 cents on a 10 wide profit trap. There's risk on that trade, but there's at least defense. So let me type this in for daily profit play. Top D. So our pending order was now filled. Filled. Today's US and Iran deal caused an inefficient spike, surge, and our $2 pending order is now filled. All right, so my top defense is a 10 wide. $7,585, $7,595, $7,615, 10 cents debit. Small debit, but provides. So more importantly, is the break-even price is 7605. And the 7595. Okay. So there is a small defense trade. If I want to go 90, I could also pin this one. So this would be 15 wide. Small debit. Still going to be like a 20-cent debit. I don't love that trade, but that gives me another, that at least gives you some protection. If I'm wrong on the 20 wide, I've got about now $1,500 worth of profit traps to help offset some of that. Trump asked for a few days to think about the final deal. All right. We'll see what happens. I don't want to overpay for the defense. This one's not bad. That's a butterfly for 25 cents. That is 15 wide. All right, that's too expensive. Broken wing style, 20 cents debit. I'll take this one. This gives me up to like $2,500 in profit traps. Let me see if I can get this one for 15 cents. 15 to 20 cents debit. I'm willing to pay that. I probably don't need it, but I'd rather walk away with $170 to $175 safely than, have no defense to the upside. So put this in at a 20-cent debit. Come on. I'll let that sit. Before I get too crazy on the defense here, has anything changed in the gamma profile? 75, 55 seems a little bit more gettable. Dynamic expected move is bumped up to about 75, 70 right now. A lot of resistance here around the 75, 50 handle, or at least a lot of reaction, I should say. So we'll see if this, now that we're above 30 to 50 kind of becomes like the new zone. Intra-week highs, by the way, were 75, 54. So let me see. The fact that we're mid-price at 15, I'll go 25. That's annoying to me, but it's a $15 profit trap. All right. So I'm playing another top D if you're interested. Again, these are defense trades that are optional. I'm doing the 7590, 7605, and 7630 for 25 cents debit. So this is a break-even price, would be 15 wide 7620, and the 7605 pin provides up to $15 profit trap. All right, so I've got some defense sprinkled in here. I'm just going to let this thing marinate. We'll see if the price cooperates and kind of struggles at this expected move. If we go, let me move the. Let me pull up another workspace here. I'm going to pull the VIX box for a second. I want to get my ATRs. So if we center this bad boy. Ah, oh, baby. All right, this is a good read, and if this is accurate, this 1-month correlation is down to 8. We are very, very close to having a correction. I'll explain that in a second. Let me go into today's opening bell price. I'm gonna center this thing around the 75.20 there. All right, so are we gonna hit the 100% ATR today? Hopefully not. If we do, I do have defense. I have defense with a 75.95, which is the top of my VIX box. I have defense at 76.05. So, I mean, part of me is prepared for some shenanigans today that the market might be coming up here to breach, and then hopefully fading, by tomorrow or early next week. So, oil is rattled back. I mean, meaning what? It's falling lower. Yeah. I mean, what's happening intraday? Did oil just fade on the deal? Yeah, there was a 15-minute candle on the deal. So there's oil dropping. So from 90 down to, 87. We'll see if that is sustained. I mean, oil to me, it's like the market loves the fact that oil's not at $100 anymore. But I do wonder what happens if oil either bounces bounces around like 85 or bounces at 80 and it just heads right back up and it stays, surprisingly sticky. I don't think this price is going away. If it drops, the markets might love it, but we've been going to all-time highs despite oil, jumping around back and forth. Okay. So this move, I'm gonna box in my defense. So I have a 7580, which I want to note here. 7580 is my call spread. 7420 is my put spread. So weigh the fudge down here. So unlikely the put side's going to get tested. Like very unlikely. Um Hey, Ford just jumped up to 1655. I'm taking some profit on Ford for once in a great while. Good on me. Ford. I just dumped some Ford for like $5 a share and hold on to that thing for several years. It's like 3 grand. See if this account gets out too. There's one account that was pretty heavy in Ford. See if they hit my profit target. Yep, just closed it out. So a little $2,100 on that account. Good. All right. So defense is in. Let me go to SPX here. You knew that Thursday wasn't going to be just this chill, calm day. Like it's hard to see the markets go, 4 days of nothing, and then it's Thursday with PCE, and it's like there's no catalyst today. Wrong. It wasn't even PCE. It was Trump. Go figure. We're at 43 though. So we're at the top end of the expected move based on what brokers calculated. We had intra-week highs at 75.54. That's what I'm watching. If the market wants to break above that, get to fresh all-time highs, congratulations, market, you went to fresh all-time highs. But is it going to breach by 30, 40, 50 points? Or is it going to hit, reject, and then fade? I want to go back to that 1-month correlation as well, because I think that is also a good sign of markets showing retracements sooner than later. I'll go to that in a sec. So I got defense in for 35 cents, which brings my net daily profit play down to about $1.65. But if there's upside risk today, I've got about $2,500 of defense, which is going to be helpful considering I am 20 wide on my daily profit play. If I don't need defense, and here's an example, do I need defense? My $2 is already trading for $1.20. If you want out of your daily profit play, take your profit, and now you have free hedges. So if there's upside risk today, don't take on the risk in daily profit play. Take your $120, get out of the trade, and now you have up to $2,500. It's not free. Like there's risk if price is going to blow through 7,600. But if we creep up towards like 75.80, 75.90, 75.95, this pays versus taking on the risk of daily profit play. Does that make sense? So already from the $2 fill, we are seeing price. Number one, price is falling off the peak today. We're at 75.39. And we're already up, 65% of our credit, which is not, and this is why I set the price where I set prices to come to us and not force a trade for a low credit when it was moving nowhere. All right. So truthfully, if I see a very quick like 150 today, I'm probably just going to take the profit because my max profit with defense is 165 anyway. If I'm already seeing $150 in that, okay, fine. Then I walk myself down to like $120 net profit on the day if there's no defense that matters. But these defensive trades are offering up to $2,500 of bonus profit if we're going to have upside risk today. Okay. All right. So I'll have to just chill for a little bit. I'm going to get these things labeled. So my 75.90 and 76.05 and my 76.30. That is a top D trade. That's just defense. So group. This one's also top D. There we go. So daily profit play in for $2. Top D, top D. These are 10 cents, 25 cents debits. This one offers up to $1,000. This one offers up to $1,500. If price pushes higher, then that's helping me defend those highs. Okay. The other trade that I took, this in the money put condor, I'm gonna rebuild this one right now to put in the exact trade that I filled at for 1750 debit. This trade should be, as I saved here. Let me go into my models. This June 2nd one. This is what the trade should be. Okay. So I got filled for 1750 debit. Okay. 1750 debit. This tail is $250. So if price is, you can see live price here at 7539. So as long as price stays below 7600, I'm pulling in $250 by Tuesday. If price is going to ramp up into 7600, my break even price is all the way up here towards 7620 or 7625. Technically, my break even is 7627.50 before I take in any risk. So if the market is going to, hey, we reached a deal and fade the news, then there's another $250 on top with this little short-term top that I just traded. Doesn't mean it's a great trade. There's still risk. Okay, the trade is in now. Should I defend this? I mean, I probably can for something very cheap. So let me go out to Tuesday and maybe play around with that. Okay. Because I should have a pretty safe $250 if all just stays the same, like sideways, little up, little down, $250. But if I go to the second, to defend this area, my weak spot is in between 76.15 and 76.40. So if I pin something, let's say around like 25, sell the 25, go, let's say 15 wide, that trade for, do I want to pay 85 cents for that? Not really. Do I want to pay, how about this one? 70 cents for that? 50 cents, sure. 50 cents defense, no problem. My break-even price, by the way, is 7627. So I want that defense probably kicking in around 30 to 35. 35 by 55. That's 20 wide for $1.25. Let's go 15 wide and see what that is. 70 cents. Tempting. That makes this winner worth $180 with defense that's low risk. That would definitely defend. But the hard part about this trade is there's no profit. It's just a max risk of, $70, $80. But it gives me a defense of, for $70, I can make up to $1,400. That essentially covers the risk on this trade. Unless, again, I'm blown out to the upside. So I could do something a little bit trickier here. Maybe the 50 by 25. That's where I want this thing to start kicking in for some profit. Something like that. But that's going to cost me more money. 45. That's 20 by 20. That's $1. 60 cents. I kind of like this. This is kind of my sweet spot here. 15 wide, 60 to 70 cents. That way I can walk away with $175 and $180. I basically have a free defense trade or I should say low risk defense trade. 60 to 65 cents isn't the end of the world. Make $175, $80 by Tuesday. Let's try 65 cents debit to get filled, and I can sleep easy over the weekend. I mean, there's still risk. I'm not risk free here. 65 cents not filling. Hopefully 70 cents will fill. All right. So that brings my 250 profit down to about $1.80. But now I have a $1,500 profit trap as well to help offset some of that risk. So as long as price by Tuesday is below 7,600, I've still got 175 to 180 bucks on the profit. And I've got a profit trap in here. This profit trap kicks in, 76.20 ish. This could be really interesting. If we're at like 76.20 here, I have a $1,000 profit trap, and I would possibly have a small profit trap on this as well. There might be some bonus trades there on Tuesday. We'll see. I'm not getting super greedy here, but I just want, honestly, just fall. At this point, just see price fall. Make my life a lot easier. Same thing for today. I want price to fall. So this is my level. I've got defense. I'm going to sprinkle in a box here. My defense trades for today. I did the 85 by 95 and the 90 by, okay, so starting at 85. Basically, I've got 85 to 76.05. So I'm going to put a box in here for me to track this on the day. So 85 is where my defense kicks in to 76.05. Those are my pin prices. If price is up in this window into the close today, if price is in this window to the close today, then there's going to be some bonus profit opportunities. All right. So now to kind of map out the day, daily profit play, as long as price stays below this line, we're in good shape. I've got defense above it to hopefully, protect any type of crazy risk if we're going to get blown out to the upside. The 100% ATR, which I'm hoping is not reached today. If we do reach it today, that's right at my call strike for daily profit play. I do have defense kicking in right near the top of the VIX box, which, by the way, the VIX is trading at 15.9. We're down to some fresh lows on the VIX right now. That should also keep us under a 1% move, by the way. So if we have a price here, that is a 0.7. There's a 1% move. I mean, just saying, like with the VIX dropping, we shouldn't really see price get above 75.90 or 75.95 today with a VIX extreme. My hope is that price has this one day, this one kind of 5 to 10 minute thrust. We're just going to hang out here for the day. And did we poke highs? 54 was the intra-week high. Check this out. Look at what happened here. Look at this price action. So we had highs from, get this out of the way. So the highs from Monday night when futures opened back up after the Memorial Day holiday, futures poked around 75.54 with the SPX CFD. And then we poked again on Wednesday, like 1 point higher. We did the exact same thing today. Here's a high of 58. So clearly the market's responding to this intra-week high, but yet it's not able to overtake it as of yet. My judgment on the current price is that this is an inefficient candle. You don't see the market thrust like this without typically doing a pullback. So this thrust was tested. It doesn't look like much, but can everyone see how this was kind of inefficient and it came back to test it? This was inefficient, came back to test it. This was inefficient, came back to test it. This was inefficient. I think it's coming back down to test it. And whether it's today or tomorrow, it doesn't really matter. But I think that the price action will ultimately test these levels. Okay. All right. So how are we doing? I'm going to set some chart alarms up here towards. I guess I'll set it like 75 and just give me a heads up that we're coming up that high. Let me check the gamma profile and see what's happening in real time. Let's see if this efficiency candle comes back to 75.25 as a retest. Because if we do and the expected move continues to shrink for the day, a retest of like 7525 would be great. That means that our daily prop play is most likely very, very safe for the day. So gamma right now, I mean, 55 is starting to spot up here. 50, 55 starting to light up a little bit. 70-ish. There's gamma starting to get up here. I just noted the expected move, early in the morning around like 65 or 70. So hopefully prices are no higher than like 70 today as far as the close goes. We will see. So, trades in. There's some active defense. We're showing some profit already. That's fine. Let's do this. This is a June 2nd. This is going to be that in the money. So this is the ITM put Condor defense. So I have the put Condor, the defense, and between these two net-wise, they should give me about $175, $180 between the two. And then today's daily profit play is worth up to $200. I'll keep an eye on that one. And I have some defense up to $2,500 of profit reps. Hopefully it's enough. Yep. So everyone that has the expected, so here's the deal on the expected move box. My expected move box indicator that many of you purchased for $20. For those of you that have already purchased it, I'm going to send you. So what I have to do is I'm going in through all the transactions, all the emails, everyone that had TradingView access or wanted the TradingView invite versus Thinkorswim. I have it for both Thinkorswim and for TradingView. I have to go back into every email, every TradingView profile, and I will just provide access to the all ticker, right? The expected move box all tickers. And what I'll do is I'll also create a separate. So if anybody wants to buy, the expected move box for the SPX, this would be. Okay, I'll just repost it. So SPX expected move, which I use every single day, or my all tickers, which you can just pull the information from your broker platform with a plus minus move, put it on any ticker. It's going to reference the previous day's close or the current day's opening price, and you can look at any of your favorite levels. So when I looked at the trade today on like Microsoft, or looked at the trade on AVGO or MDLZ, like all those trades is like I would use that expected move box to figure out where is the probability of the brokers calculating this expected move. Do I want to be more bullish or bearish? So anyway, if you purchase it, I will give you both, right? Moving forward, you get to pick one. You can have your all tickers, which still works in SPX, right? Or you have the SPX already. But like I said, I just have to compile, all the emails and all the TradingView IDs and just go through and provide access for them. So that'll just take me a couple of days to do it. I just need the time. So Joe, is that answer your question? All right, good stuff. Ronky says, didn't fill on daily profit play. Should I cancel and try with smaller credit? Well, right now that credit is way lower. right? So the credit is already showing like, I mean, we got filled for $2 is showing like maybe 80 to 90 cents now. Um, I wouldn't necessarily love that trade for, I mean, not 20 wide. For 20 wide, I don't really want to take $1,900 risk. You could possibly take the same trade and keep it at $2 and see if price moves higher. I mean, if price were to come up, let's say to fresh highs, if price were to breach this area, you could probably still get trade for $2. You still have risk up here, right? But I wouldn't chase. So I'm just going to stick it out as is. I'm hoping that today is a, buy the rumor. Now that we have the resolution, the market's like, okay, we just poked another intra-week high. The correlation thing I just mentioned earlier. Okay, we're down to 8. I want to look at this from a timing perspective. Let's get some of these levels. See this one on let's see here, April 21st. I'm gonna write these dates down. So April 21. Let's put this value at 8, by the way. Horizontal line at 8. Okay. So it's not foolproof, but anytime we've come down this low, here's the 14th of May. So let's go May 14th. Back here between the 9th of January and the 28th of January. So Jan 9 to 28. We have one way over here. What is that? October 10th. Okay. I'm pretty sure we're going to see some interesting retracements in the SPX. All right. So let's have a look here. Let's go to the daily chart. Let's go to April 21st. April 21st. Can everyone see a giant red candle that day? Yes or no? Brian, no. Sorry, dude. It's $20. I built it myself. It's $20. I know you get a lot of stuff for Diamond Club. You get all my trade alerts and education. It's like, it's $20. I built it. So there's the red candle on the 21st. That is the correlation, the 1 month correlation at 8. You can see what happened shortly after. Okay. Let's go to May 14th. May 14th. May 14th was a high. May 15th was a gap lower and some follow through. May 15th, 16th, and 17th, or this is May 15th, 18th, and 19th. We had some pullbacks there, right? So again, I mean, this is the timing that I'm kind of looking at. So, with the correlation, the 1 month correlation hits 8, and you see that there's a little pullback coming shortly after. That's likely what I see there. And then go back to January. January 9th. Okay, here's January 9th up. I'm sorry, that's February. Let's go to January. January. So the 9th to the 12th over the weekend, and then we spend 1, 2, 3, 4, 5 days down. That's just this year. Like this year in 2026, anytime that COR1M has hit 8, we've typically seen within a 5-day window, the market at least pause or go down. Okay. So all I'm saying is, that's why I was looking at that trade towards the, put condor, the in the money put condor for Tuesday. I think we're going to pause or go down, stay below 7,600. That's all based on the expected move, by the way. Hopefully that's going to be safe. Today's daily profit play. I'm outside the expected move. Most likely if I'm going to dance with a risk today and see prices getting up here, I'm hoping that my defense is going to help kick in and defend. That's what it's for, obviously, is defend. We would have to see price going a full 1%. Okay, 1% on the day, which is going to be the VIX extreme, because we're now at a 15.99 VIX, which equals about a 1% move. That's the extreme. We shouldn't see price going up above 1%. In fact, most of the time, you're going to see this maybe get to like 60 to 70% of the max VIX move anyway. So my point is, I'm hoping that today is safe for daily profit play. Defense is there if I need it. If I walk away with $1.70 today, so be it. I'm still happy with that profit. If I need defense and it kicks in, I've got over $2,500 defense. My goal is to be net profitable on the day. Okay. Thanks, Stephanie. Yeah, you can email me. Yep, Stephanie put that in there. ChrisPulverPub@gmail.com. Just send me an email. I've got a couple. I've got a reply email to send back. There's the link to it, and then I'll send a confirmation email once you purchase it. And it's best practices video. If you have a TradingView user ID, make sure you include that in the purchase. If you want it on Thinkorswim, just type in Thinkorswim. It's all part of that like checkout page for $20. Okay. So I will say this very quickly on this link. If anybody wants the expected move box, I'll share the link. Let me just find it right here. If anybody wants the expected move box, let me find the link because I will say this. I'll open it up to everyone watching today. I'm going to do this separately after this week. So, I mean, for everyone that's watching today, 3, 4, 500 people watching this video, if you want my expected move box for $20, I will give you the all ticker as well as the SPX. Moving forward, it's one or the other. They're both going to be $20. So you're happy to have both, fine. I mean, they're not expensive. But if you purchase one of them, then I will give you both. Okay. So I'm going to go in and just find that link again, and I'll update this. And I'll make a separate link for the all tickers. Okay. So let's find the link here, expected move box. Make sure that's the right link. Should be $20. Yep, it's perfect. All right, cool. So this one here, link. There we go. And then I'll add this one as a separate ticker. But if you want it, here's the link. So copy. Actually do this. I don't want to send the link in there. Just email me. Okay. ChrisPulverPub@gmail.com. And subject expected move box. So if I see all the members that have already purchased the expected move box, and anyone that comes in today and tomorrow, I will give you both the SPX expected move box as well as the all tickers one. So if you have it on Thinkorswim or you prefer Thinkorswim or you prefer TradingView, I'll give you both. Thinkorswim is it's going to be a grid link to just add the pop-up chart, and then TradingView is going to be you can have the indicator, and it's just going to be an invite only, and you just find it in your indicator section. So if you go here to indicators, invite only, you will see my expected move box and expected move box any tickers. You'll give you both of these. Cool. All right. Let's see here. That's fine. Let me get. All right. So let's kind of get a little game plan for the day. We're at the higher end of the calculated move. There wasn't really a gap adjusted day because we opened up pretty much right where we started. So yesterday's close to today's open is very much the same. So, TC showed a 3168. Here's your 3168. It's been tested. Doesn't mean breached. But the nice part is our trade today for daily profit light, we are giving ourselves a little bit more breathing room than usual, which I'm actually quite happy with. So I still think the trade for us is going to be relatively safe today. I may not need the defense, but because of this type of stupidity of like, hey, that market's inefficient, it could be one of those days where the market is like, yeah, we're just going to try to grind higher. But a couple things that I think the market has working against it right now in the short term. We just hit that 1 month correlation at 8, which I've shown like 3, 4 examples that it typically falls or pauses within a couple days around that reading of correlation 8. And on top of that, going to the expected move, having the market kind of, I don't know, exhausted by like we're at all-time highs, the semiconductors are ripping. Is this a buy the rumor, sell the news type event? Yes, no, maybe so. Is oil smashing lower? I mean, oil has dropped a little bit. but it's all reactionary type stuff. Also, intra-week price action, like I mentioned, 75.53 was Monday to Tuesday's high. 75.54 was Wednesday to Thursday's high, and we just poked it again today at 58. So if we are not going higher here, right? So if this is resistance and resistance and resistance, and the market is struggling to breach this level, then we're still just kind of hanging out here for the entire week. So there's our high, and there's our low, and the market doesn't seem to be able to break it yet. Now, can it break and breach this tomorrow? Maybe, right? Do we come back tomorrow and see the market back down, at 7,500? I don't know. We'll worry about that tomorrow. Okay. Oracle jumping. Yeah, I mean, this is like the ultimate chase, man. I mean, if you're chasing this stuff, it's like, sure, Oracle was great for a second, super freaking crappy for a few months after I mean, this is like the AI trade. This is how serious the AI demand is, and it proceeded to drop, 61%. Like, that's why it's hard for me to want to chase some of this stuff. And I look at a chart like this, and I'm thinking, I can't chase this stuff. Now, I don't mind taking a low, high, a pullback, and give me a trade in here. Give me a trade. Just don't make me buy the top. Just don't make me buy the top. Looking at Dell. Dell's gapped up higher again. It's like, give me a pullback. We haven't even hit the 21 period moving average since February. And the fact that we are this far overstretched is like, I cannot justify in any type of discipline that I have in trading, I can't justify buying these levels. So I'm going to wait. And even with a pullback here, it still makes me skeptical of, is this the time to buy that dip, or was this the chance to get the profit? If you're in it, congratulations, you just killed it because it's up 175%. But if it comes back here and then makes a lower high and lower low and lower high and lower low, and the last thing I want to see happening is this. How fun would this be for everyone? If you're watching prices, and this is what every semiconductor stock looks like in the next 3 months. That's my concern, right? Is that we get stuck chasing, and this is what ultimately price is going to drive us to. Granted, this had, I don't know, 20 weeks in a row of upside. So it still has potential to run. But this type of daily structure, that's my biggest concern with like trying to chase this stuff, is when this top is in, I don't know, man. I don't know if I want to be a dip buyer. I don't think the risk is worth it. I think that the upside it feels like the upside is already in. I know that I could be wrong. But if we have more upside, I'd rather see the upside from a steady, consistent, efficient gain of the indexes. Let the S&P benefit from it. Let the Dow benefit from it. Let the Nasdaq and the Russell benefit from it. But chasing individual stocks that are this far, this fast, this overstretched, it's really, really difficult to say that looks like a good trade to me, because I don't think it is. Right? So anyway, that's where I'm at. It's just hard. It feels like you definitely missed out. You feel like you left some money on the table. I'm pretty happy being up, double digits for the year, with also minimum drawdown during that 10% dispersion trade. And also piecing together, like, we're going to grind every day. We're going to grind every week, and I'll continue to trade. And if the market wants to make all-time highs, guess what? We're going to make money in daily profit play. We'll make money in waterfall income. We'll make money. I mean, we've been doing very well on our occasional newsbreakers trade. Double ups will find some great pin prices. Yesterday was a winner of, like, if you held it to expiration, it was a greater than 100% winner. Pinch point, always great. I mean, put the pending order in for Microsoft today. I'll build out a couple more. Engineered options, we'll make money. Flash point income, we just need dips and pullbacks, which I think we will get. We'll make some money. Crash insurance. I mean, I think the crash insurance stuff isn't ready yet. We did have a good trade on crash insurance. My $350 VIX bet was up like $2,000 at one point, but I was going for like the 40, 50, 60 VIX, and it never occurred. So I just sat on it, lost a few $100. Project options edge. We have some expirations that are coming due this month, or I think middle of June. So, and we've taken lots of trades and lots of very, very safe out of the money trades for some good premium. So we will be fine. That's my point. We'll be fine on whatever we do to trade this. I just need to make sure that I don't feel like an idiot not chasing the wild and crazy shiny object stuff. Okay. A good thing we didn't do reverse iron condor. Well, I mean, actually, you want that trade, right? Stephanie, you want the inverse iron condor because now you're getting profit. Because the initial inverse that I talked about would be the what? If it was above 30, so here's your dead zone. So built out the trade earlier. I was like, if it's above something like this, if it was above 75.30, 75.30, or below 7,500, you get paid, right? So where's it at right now? At 54, which means that you're getting out of this dead zone and you're greater than 75.30, which means you're probably showing some profit. So, I mean, yeah, it would have worked. And that's why I said like Thursday, PCE. And again, this isn't even PCE. This is Trump, this is Iran US. But there was something brewing in the market that's like, okay, we are going to try to poke all-time highs today. And we are doing it. Because now the S&P is like, hey, we're at all-time highs. The CFD has already hit 58 this week. So we'll see if we get to, 58 or 60 or 65, whatever this looks like. My risk comes in at 75.80. My gamma right now is lighting up with a bit more around the 75.70 zone, 75.80 zone. It does seem, I mean, it seems gettable. Here's a potential pin price at 75.70. I mean, I could take on some heat today, but I do have defense that kicks in around 85 to 90. So we'll see if that helps me offset some of the risk on my daily profit play if I need it. Okay. All right. Back to the correlation. Okay. So what the core 1M, what that is a correlation measurement. Okay. Correlation measurement. And so we have like the top 50 stocks. And so what this typically is when we see like super, super high concentration in very, very few stocks, usually the market's looking for rotation when the number gets down to 8. For whatever reason, that's like the line in the sand. If you've ever heard me reference the S5FI, that is the market breadth indicator. It's the same type of thing here. The market leadership is so narrow that usually we start to see like profit taking, diversification, rotation when this happens. And usually rotations happen with some type of pauses or pullbacks in what has been leading. The S&P has been up, the Nasdaq's been up, and so there tends to be a little bit of a pause or pullback. Okay. So it also shows complacency, where when we have this really low reading like an 8, it shows that, expectations are extremely narrow, that we're just going to see higher highs, and it's like everyone is complacent, right? Which is why I'm also, as a bit of the contrarian play, I like to go against the grain with stuff like that, right? Okay. Hopefully that makes sense. All right. So let me do this. I'm going to read through. Let's do a live segment today. I'm going to do a live prezo on pinch point. I've got the presentation right here ready to go. Okay. Yep, Deanna, just let you know I'll go live here. So we have a couple of tickers. We actually looked at a couple. So Microsoft, Mondelez, AVGO, take to interactive. I'm going to do this. I will. Here, look, if you stick around, let's do a live prezo. If you'd like to get a little sample of pinch point with me, I'm going to price out some trades at the end of today's session. So I will power through the presentation. It's going to take about 35 to 40 minutes, and then give me 10 or 15 minutes. I'm going to try to price out some more trades. You can get some freebies from me today. They're in the end of the presentation. I also have a couple that I highlighted and I sent to my members. So I'm going to give a couple freebies today. Members, you will get the alerts if you're here to freeload and here to hang out and just here to listen. Take some notes. But if you are a member or you want to get access to my pinch point, then you'll get the Telegram channel and the alerts sent to you today. Walter says freebies. Yes. Okay. So I'll do this. If you're watching on YouTube, I'm going to wrap it up here. Just a quick recap for the day. Watching current gamma profile. We are seeing, so I mean, I kind of noted the 70-75 zone today. I know that my 75-80 could be tested, maybe threatened today. I get it. There's gamma filling up between the 50, 55, 70, and 80 zone. I still look at today's price action as pseudo inefficient. So whether it's, the market goes up today, up a little bit more, and then gives some of it back later today or tomorrow, that wouldn't surprise me. But I'm trying to play defense to make sure that if I'm going to see some risk to the upside, I have some profit potential to help defend my, what am I taking? $1,800 risk. So I have $1,800 of risk and I have $2,500 of potential profit traps. So hopefully that's enough defense to at least get me break even or better on the day. This one should be a full winner. I'm looking to make sure I can hopefully defend a net winner on the day. And if price stays inside the blue lines, great. We'll make some money. No profit trap needed. No defense needed. Cool. All right. So let me pause the YouTube session. We'll come back and do this again tomorrow. Stick with me on Zoom and let's run through the pinch point. If you want to be a freebie, you want some free trades, YouTube people, come onto my Zoom channel because I'm going to power through the presentation on Zoom. Okay, so I'll wrap it up here on YouTube and I'll stay in Zoom and we'll run through some pinch point.